Sometimes the best way to really understand the massive forces that are shaping our world isn't to look at a whole year or a decade. Nope. Sometimes you gotta zoom way in on just a single, really chaotic day. And that's what we're gonna do. We're gonna unpack everything that happened on Friday, January 30th, 2026, to see how politics, tech, and the economy all crashed into each other in real time. So the day kicked off with an absolute shockwave through the financial markets. This number you're looking at, negative 31.4%, that was the historic one-day crash in silver futures. And gold, well, it wasn't too far behind. It was a completely brutal and sudden sell-off that left traders just scrambling. And yeah, that's the big question, right? What on earth just happened? How does a market panic like this just ignite out of nowhere? Well, to figure that out, we need to rewind the clock just a few hours and follow the breadcrumbs that led to all this chaos. Look, this wasn't just any old drop in the market. For silver, this was the single worst day it had since all the way back in March of 1980. And the trigger? It wasn't some corporate meltdown or a natural disaster. Nope. It was a single political announcement that came straight out of the White House. So here's how the dominoes fell, one by one. First, in the morning, news starts to leak that President Trump is planning to nominate Kevin Warsh to be the next head of the Federal Reserve. The markets? They reacted instantly. The US dollar shot up, because Warsh is seen as this steady hand, someone who'd protect the Fed's independence. And with a soaring dollar, things like gold and silver, which are priced in dollars, suddenly got way more expensive for anyone buying with foreign currency. So for all those investors who'd been riding this incredible wave, gold was up 66% and silver a mind-blowing 135% in the last year, that was the signal. They all rushed for the exits at once to lock in their profits, and that's when the selling frenzy really began. Now, while all that chaos was happening on the trading floor, there were these other, much bigger currents pulling everything along. We're shifting gears from the market to the incredibly high-stakes battle for the future of technology itself, the great AI arms race. And this number tells a huge piece of that story. 64%. On this very same day, that was the reported growth in SanDisk's data center business. And why? Because of the absolutely insatiable, non-stop demand for memory chips to power the AI revolution. Companies are in an all-out sprint just to build the physical stuff that AI needs to even exist. And see, this is where it gets really interesting. It's not just about who can build the fastest chips. It's about who gets to write the rules. The fight for AI supremacy isn't just happening in labs. It's being fought tooth and nail in the halls of power. $125 million. That is a ton of money. And it's how much a brand new AI industry super PAC called Leading the Future raised in 2025 alone. It's backed by all the heavy hitters, Andreessen Horowitz, OpenAI, and its entire goal is to influence who writes the national rulebook for artificial intelligence. So you've got this battle being fought on two totally different fronts. On one side, you have the public war of political influence, a super PAC openly trying to shape laws. And on the other side, you have the secret war. Because on this exact same Friday, a former Google engineer was convicted of stealing AI trade secrets for China. It was the first conviction of its kind, and a pretty stark reminder of just how high the stakes really are. Okay, so the AI race was a huge undercurrent, but it wasn't the only one. Another major story from that day showed this growing split right down the middle of the US economy, and it was perfectly captured by the way Americans were spending their money. You don't have to take my word for it. On their earnings call, the CEO of American Express, Stephen Squeri, he just laid it out there. He said the company was literally shifting its marketing away from its no-fee cards to double down on its fanciest products, like the Platinum card that costs almost $900 a year. Why would they do that? Simple. That's where the growth is. And this whole strategy is a direct response to what's known as the K-shaped economy. It's a really powerful visual once you get it. Imagine the letter K. The top arm is going up. That's the wealthy, seeing their fortunes rise. But the bottom arm is going down or flat. That's the middle and lower income groups getting left behind. The paths are just diverging. And the actual numbers that Amex dropped on this Friday were, well, they were stunning. Just look at this. Spending at luxury retailers jumped 15%. First and business class flights were up 9%. But meanwhile, spending on regular airline tickets and hotels grew way, way slower. This isn't just a business plan, it's a mirror reflecting two completely different American economies.
So, if you're a big company in the middle of all this, market shocks, a splitting economy, what do? Well, on this one day, we saw three different companies make absolutely massive, super risky, and maybe even game-changing bets on what's next.
First up, Jeff Bezos' Blue Origin. I mean, they had built a pretty successful space tourism business with their New Shepard rocket. But then they made this jaw-dropping announcement. They were pausing that whole program to go all in on their $3.6 billion NASA contract to build a moonlander. It was a radical pivot away from a proven business toward a much, much bigger goal.
And the big bets didn't stop there. The CEO of GameStop, Ryan Cohen, he revealed a plan for what he called a very, very, very big acquisition to try and grow the company's value by 10 times to over $100 billion. And then you have the drug maker Eli Lilly announcing a massive $3.5 billion investment in a new factory, all because they're betting that Medicare is about to start covering new obesity drugs, which would just create a tidal wave of demand.
Okay, let's take a breath. We've seen market chaos, an AI arms race, a diverging economy, and some incredibly bold corporate bets, all crammed into a single day. So what's the bottom line here? How did all this complexity and chaos shake out? Let's look at how the market closed. And then we have one final story that I think reveals where the real weakness might be.
So after all of that, the market had a wild ride for sure, but it actually ended the day in the red. As you can see, the S&P 500, the Dow, the Nasdaq, they all closed down. A pretty downbeat end to a very chaotic day, or so it seems.
But, and this is the really important part, here's the twist. If you just zoom out a tiny bit, the whole picture flips. Despite all the chaos of that Friday, the S&P 500 actually finished the entire month of January up 1.4%. It's just a perfect lesson in the difference between the short-term noise and the long-term trend. But the stock market isn't the only place where the big picture can be a little misleading. In the super complex, high-tech world, we kind of assume that all the biggest threats are also super complex and high-tech. But our final story from this day shows that sometimes the biggest threat isn't hacking the code, it's hacking the human. The pros call this social engineering.
So on this Friday, a digital asset company called Fireblocks revealed it had uncovered this incredibly sophisticated scam being run by North Korea's infamous Lazarus Group. But they weren't trying to break code. They were posing as recruiters on LinkedIn, holding fake job interviews on Google Meet, and then giving developers these coding assignments that secretly installed malware on their computers. The goal? Hack the developer to get to the crypto. It's just a perfect and kind of scary example of the hidden battles being fought right under our noses.
Which really brings us to our final thought for the day. We've seen a day driven by complex algorithms, by incredible corporate ambition, by deep economic divides. But from the market panic that was triggered by human emotion to a cyber heist that relied on plain old human trust, maybe the biggest variable in all of these complex systems, from Wall Street to Silicon Valley, is still exactly what it's always been: us.